from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, gas panic. A rush on fuel is spreading from the southeastern U.S. to states like New Jersey and Pennsylvania. This after hackers knocked the Colonial Pipeline out of service last week. We'll have the latest. Plus, Bitwise launches the first crypto industry ETF. We'll talk about investor demand for crypto exposure with CIO Matt Hogan. And free beer, transportation, gift cards. They're just some of the incentives being offered by cities and states to get more people vaccinated. Will the perks work? We'll discuss. All those stories in a moment, but first, U.S. stocks tumbling the most since February after the latest CPI data showed inflation creeping upward. Bloomberg's Kriti Gupta has more on that and tech earnings that continue to roll out. Kriti, take it away.
Well, Emily, let's just start big picture here. Selling across the board really accelerated by, you said it, that inflation scare. CPI data really spooking markets right at the pre-market and snowballing throughout the day. You can see right behind me the S&P 500 all the way to the semiconductors really taking a hit. Semiconductors in particular saying some extra selling pressure, down 4.2%. Remember, they're already in correction territory, and that comes as we start to see bond yields get higher and higher. I do want to talk about some of those earnings stories, though, that you mentioned, because we are still seeing those valuation concerns come about, and those earnings stories are going to be crucial. Let's just kick it off here with Bumble shares in particular. Oh, well, let's rewind a little bit. The NASDAQ 100 on a 3-day time frame. Like I said, that selling is accelerating. Let's see if Thursday ends up being a turnaround Thursday story. But now let's go to those tech earnings. I do want to hit it off with Bumble because, like I said, you are seeing them beat revenue estimates on that reopening, saying that people are now socializing. Emily, looks like not enough, however, to boost the stock. Sonos, however, in the green after hours by a whopping 15%. This coming after they're hiking their forecast on really strong speaker sales. Who knew people were this into speakers? And lastly, Poshmark down 11%, dropping after their second quarter revenue outlook misses their midpoints. Not a great idea, or not a great time, I should say, to be missing your estimates when so many of these companies are beating them by a huge margin, Emily.
All right, Kriti, thanks so much for that update. We are learning new details now about how the federal agency charged with protecting the nation's pipelines has and has not been working. It turns out the U.S. Transportation Security Administration's Pipeline Security Branch hasn't imposed any mandatory cybersecurity requirements since its creation in the wake of the September 11th terrorist attacks. That's even despite dire warnings from the intelligence community about vulnerability to hackers. Instead, they've relied on voluntary best practices and self-reporting by the industry to secure operations. Let's bring in Wendy Whitmore of Palo Alto Networks now to discuss more. So we're learning more about this Pipeline Security Agency. Wendy, just 6 full-time jobs as of 2018. Why wasn't this better staffed, and why wasn't this infrastructure better protected?
Hi, Emily. Yeah, the reality is that cybersecurity is a team sport, right? So this part of the organization is one component that needs to continue to be strengthened, along with the focus on the reality that this is a problem we can no longer avoid, right? So we expect the organizations themselves to put in place the right technologies, many of which are continuing to improve on a daily basis. But ultimately, we're going to have to work together as a highly collaborative country and series of organizations in order to effectively combat against these types of attacks.
Now, we're learning more about the mechanics of this hack itself. The Colonial Pipeline, they actually shut down the entire pipeline despite the attack being on the enterprise network. Why would they do that? Shouldn't those be separate?
So they likely are very separate. We often see this when we work with organizations who have an operating technology or a SCADA environment, as well as a corporate environment. The concern is that oftentimes these malware operators, and in this case, ransomware attackers, will be able to successfully jump from the corporate environment into that operating environment, and that could ultimately cause some significant damage. So many times clients are forced to make a risk-based decision, weigh the pros and cons of determining how to continue business while making sure that they don't remain susceptible to further damage.
Now, Palo Alto Networks is actually quite familiar with the DarkSide, this group that has claimed responsibility. What can you tell us about them and how they work?
Yeah, they're a pretty interesting group. So I would say right now they're extremely prolific. They're very busy. We see them in a number of cases that we're running today. They tend to be more aggressive than other actors. One of the things they do, though, is during that first period of 72 hours, they tend to be pretty quiet and they're not looking to engage and make contact with the victim environment. They're expecting that the client reaches out to them. So in one case we've got where we have a client who had successfully backed up their entire system. They didn't have any reason to reach out and potentially engage in dialogue. The attacker then got increasingly more frustrated. So they then increased to sending emails to certain officials within the organization. And when those weren't responded to, then they started making demands via telephone calls to the CEO, the CFO, and other high-level officials. They tend to, if their demands aren't met, then they'll move to a second stage, which we're all too familiar with, which is essentially releasing the data publicly that they have stolen from the environment. And so they're really looking to negotiate to get an economic settlement on their return. They are, I would say, more professional in terms of their code of ethics and their code of conduct, and they really almost run their organization like a business when it comes to the negotiations with victims.
Well, it's so interesting. They've actually issued a press release apologizing for disrupting the pipeline itself and said that they'll plan to better vet their victims in the future. And yet here they are holding, entire fuel line for ransom. What's your sense of whether Colonial has paid that ransom? And if they don't pay that ransom, what happens next?
Well, I would say, the press release certainly would be an indication of what many of us thought, which was that the DarkSide likely didn't want to garner this type of press attention, right? Getting the US government involved in an attack is not something most of these operators want to do. They want to operate behind the scenes, negotiate quietly, and then move on to their next attack. So regarding Colonial, my guess is they're continuing to strengthening their defenses and making sure that they're well positioned to get the organization back to running operationally moving forward so that they don't have to deal with this type of situation again.
But so does that mean you think they've paid or are planning to pay the ransom in order to make that happen? And then will DarkSide just get away with it?
This is always a risk-based decision. We certainly never recommend to any organization that they pay the ransom, but ultimately that's going to be a risk-based decision based on the data that's been stolen and ultimately what methods they have to recover that data or get systems back online operationally. So, ideally, I would say DarkSide most likely will be looking to shift some of their operations in the sense of going behind the scenes again, moving forward, right? I imagine they're going to continue to be prolifically attacking organizations, and that really points to us the need that, again, this is such a huge problem. We need all hands on deck to solve it, and that's everything from government and multinational agencies to technology working together with the private sector to continue to improve our defenses.
And do you have any indication of whether the DarkSide is affiliated with a nation state, and specifically Russia?
There's no solid attribution of that today. We know that many of these organizations are operating from Eastern Europe, and in many cases, countries like Russia are providing safe havens for these types of attackers. So that's certainly a concern.
All right, Wendy Whitmore, thank you so much for that very comprehensive view. Appreciate you joining us. Wendy Whitmore of Palo Alto Networks joining us there today. All right, coming up, a new ETF offering a way for investors to gain exposure to the crypto market without the challenges of directly holding crypto assets like Bitcoin and Ethereum. All the details on the new fund coming from Bitwise next. This is Bloomberg. A digital token launched Monday is already one of the largest cryptocurrencies in the world. The token is known as Internet Computer. It now has a market value of $45 billion. The coin and its related digital ledger are supposed to help anyone publish anything they want onto the internet without having to go through digital giants like Amazon.
The miracle of the internet computer is that it's able to create a blockchain by combining the compute capacity of these node machines around the world in a way that allows it to run at web speed and to increase its capacity with demand and run very efficiently. And this means that you can build things on a blockchain now that you never would have imagined would have been possible.
Internet Computer is now ranked 9th among the top 10 cryptocurrencies. And sticking with crypto, Bitwise Asset Management is one of the largest crypto specialist asset managers with over $1.5 billion of assets under management, and has now announced the launch of the Bitwise Crypto Industry Innovators ETF. Under the ticker BITQ, it aims to provide investors with exposure to valuable public companies that are participants in the growing Bitcoin and crypto sector. To discuss, we're joined by Matt Hogan, Bitwise CIO. Matt, thanks so much for joining us. So talk to us exactly about how the ETF will work.
Sure. The ETF is designed to provide pure play exposure to the picks and shovels that are building the infrastructure that makes the crypto economy hum. So these are the crypto miners, crypto mining equipment manufacturers, banks that provide services to crypto companies like Silvergate, and crypto brokerages and trading firms like Coinbase, all packaged into a single ETF that makes it easy for investors to bet on the growth in crypto without the challenges of owning Bitcoin, Ethereum, or other crypto assets directly.
Right. So you're not, this wouldn't involve holding any direct assets like this new internet computer, which just popped up.
That's exactly right. Internet computer is phenomenally interesting, but so are the companies inside this. It's akin to owning gold miners instead of gold itself. But the exciting thing about these companies, they're really phenomenal companies. They're some of the fastest growing companies in America, but they're also profitable. That's pretty rare. Usually when you have companies growing as fast as Coinbase, as fast as Canaan, as fast as Silvergate, they're not yet profitable. They're early stage technology companies. An interesting thing about crypto infrastructure is it combines high growth with high profitability. It makes it a very exciting area of the market to look at.
We're going to be covering Coinbase earnings out tomorrow, their first as a public company. What is your outlook on the exchange race? Of course, it's the most mainstream player, but there are certainly other rising exchanges, and it's a fairly early market.
It is an early market. It's the largest crypto brokerage and exchange. It's the largest holding in our new ETF. I think the story for this market is growth, right? It's still the case that most American investors are on the sidelines of crypto. They are going to move into the crypto market. Coinbase is going to be one of the primary places they go. It has some of the best UX in the crypto market. It's easy for investors to understand and use. It has a great brand. So I think Coinbase and the broader crypto exchange market is going to grow as the investors who are still thinking about crypto take their first baby steps into the industry. And that's happening now. It's happening fast.
So if Tesla started to accept Dogecoin, does that mean Tesla would be part of this portfolio, or is it already because they accept Bitcoin?
That's an amazing question. Yes, Tesla is part of the portfolio. The portfolio has two sleeves. So at every rebalance, 85% is invested in pure play companies like Coinbase that exclusively are focused on the crypto market. But there is a sleeve for supporting companies like Tesla, like PayPal, like Square. 15% of the portfolio at each rebalance is focused on these companies, which have diversified businesses, but are still important actors in the crypto economy. So you get both in the ETF at once, although again, the majority, 85%, is focused on those pure plays.
What is your take on Doge, especially in the aftermath of the SNL run-up? Of course, we saw major swings on both sides of Elon Musk's appearance on Saturday Night Live, and so many believers, yet so many skeptics who are also crypto fanatics who believe that Dogecoin is quite simply a joke.
It is a joke, and it's a dangerous joke at that, because there's real money at stake. Investors could lose a lot of money. The reason they're crypto fanatics who aren't excited about Doge is that as you dig in and look at the underpinnings of the blockchain, it's not an exciting blockchain. It doesn't have its own miners. It doesn't have developer activity. And it's distracting people from the real progress that we're seeing on Bitcoin, Ethereum, and other large cap crypto assets. So I do think, the days of us talking about Doge are few in the future. I think it's going to go away by and large. The sooner it does that, the better is my view.
All right, we're going to have to ask for Elon Musk's feedback on that on Twitter, but I appreciate you being straight with us. Matt Hogan, Bitwise Asset Management CIO, will be following the ETF. Thanks so much for joining us. All right, coming up, we'll have a preview of Disney's eagerly anticipated second quarter earnings after the reopening of Disneyland and parks around the world, and how a thawing economy could boost the bottom line. And it's not just the theme parks. We're going to find out how Disney Plus performs and how it stacks up again with the rest of the streaming giants. Here's a look at how companies like Disney, Netflix, and Discovery perform Wednesday in trading. This is Bloomberg. Disney's business was a prime target for industries worst hit by the pandemic, from movies and cruises to theme parks and sports, all shut down, affecting thousands of jobs. Now, it could be the barometer of how the economy reopens. Caroline Hyde reports.
Disney's business model was a prime example of what was worst hit by the pandemic. Movies, cruises, theme parks, sports, all shut down, affecting thousands of jobs.
Tourism industry in Central Florida is what makes up the bulk of the business there. And so it is an absolute, it really is a tragedy for thousands of workers and thousands of Floridians that are in desperate need of help and that are unable to find work.
Though it wasn't all bad, for the company at least. Disney Plus. It took off as people stuck at home turned to television for entertainment.
We're incredibly proud of how much our stories have been embraced by people around the world. 95% of the population in 12 of our top global markets engaged with our content over the past year alone.
While it has been a long year for the company, going from cutting 28,000 theme park jobs to a major executive reorganization, things are starting to look up. The happiest place on earth is now open, and vaccinations are helping to ease concerns about the pandemic.
We're thrilled with the response that we're seeing from our guests in terms of future reservations and intent to come back to our parks.
This pent-up demand being seen not only at Disney, but across the leisure and hospitality landscape.
Summer's going to be busy for sure. I mean, there are places, certainly around the U.S., that are virtually sold out at this point.
Disney is set to report earnings, and the results, plus their forecasts, will be a glimpse into people's desire to re-enter the slowly reopening economy.
Bloomberg's Caroline Hyde there. And we are going to be all over Disney results tomorrow. Let's get a preview of what we can expect when the company reports its latest quarter. Our Chris Palmieri, Bloomberg's LA Bureau Chief, with us now. So Chris, of course, we know the streaming business has soared over the course of the pandemic, but other businesses have suffered. What are you going to be watching? Obviously, we know that Disneyland and now most of the parks around the world are back open.
Well, in terms of just looking at the numbers, I don't think we're going to see a lot, still, sales and profits that are way down from where they were a year ago. The Wall Street's expecting just maybe 30 cents a share in earnings. But what everyone will be looking for are signs of things to come, because this has become, as you suggested in that piece, a post-pandemic play. So are they going to go to 100% capacity at Disney World? Are they going to reopen Paris, which will be the last park that's still closed around the world? Any indication of summer demand? I'm already looking at the site in this many days in May and June that Disneyland is sold out, and folks are going to be driving in particular to a lot of U.S. destinations for vacations. So this could be the story going forward.
Meantime, we're always watching those Disney Plus numbers, which continue to get higher and higher and sometimes faster than we expect. What are you watching for there?
Well, interestingly enough, that has been the story that's been holding up the stock and really driving it to new highs last year, was all of those folks subscribing and watching Disney Plus. The Street has a roughly 110 million subscriber forecast. That's not a whole lot more than what Disney's already said, which is 100 million subscribers. Some of these new products have been rolling out, like Hotstar in India has been doing very well, and they added Star, a general entertainment product, to their offering of Disney Plus in Europe. So it's quite possible that they once again surprise everyone on those subscriber numbers. And also potentially on the losses that direct-to-consumer business has been enduring as they continue to invest in new content for it.
Now, in terms of how the theme parks have reopened, it seems like it's been a fairly smooth process at limited capacity. Is it going generally well? Is there anything in particular that you would highlight?
No, I remember when Florida opened last year, it was sort of right in the thick of a surge of coronavirus cases, and everybody said, what are you doing? But the combination, of the precautions that they're taking, the mask wearing, the cleaning everything, the contactless payments, has not created a situation where there's been any major outbreaks at theme parks, and so they've been able to, Florida is actually wide open in terms of what they're allowed to open in capacity, and they've actually been holding back some. They've sort of proven that they can do this without a big problem.
Now, in terms of the movie business, last time I spoke with Bob Chapek, he talked about a more flexible model, not always having to go direct to theaters, though they are still hoping to take, many movies to theaters. Do you expect a more flexible model going forward, or do you think that once we get out of this sort of messy middle time, there will be one way and one way only to market?
Well, they're essentially having it both ways right now. I mean, two pictures, the big ones they've got coming up, Cruella and Black Widow, both of them are going to be released in theaters and on Disney Plus, although on Disney Plus for that $30 extra charge that they've been doing. And, they did it with Mulan, they did it with Raya recently. The fact that they're continuing to do that suggests that they like what they see, although they've never admitted how many subscribers, how many people actually pay for it. So that's definitely something they're going to continue this year, and I don't see it ending anytime soon.
All right. Bloomberg's Chris Palmieri will be all over Disney results tomorrow, as will Chris. Thank you. Coming up, tropical climate, beautiful beaches, and a diverse population. Miami now wants to be known as a U.S. tech hub. Shutterstock founder will join us. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get a quick recap on the markets with Bloomberg's Kriti Gupta in New York. Kriti, take it away.
Well, Emily, it was a painful day in the markets, not just for tech, but broadly. All that really started off with tech, though, on a downward spiral for 3 straight sessions. Now, take a look at the board behind me. You have the S&P 500 in the red and the NASDAQ 100 doing pretty poorly as well. And even the SOX index really taking the brunt of the hit, down 4.2% on the day. Of course, as we start to see yields rise and that CPI inflation coming in just much, much hotter than people were expecting. I want to show you what this is doing to the QQQ ETF, though. This is, of course, the ETF that tracks the NASDAQ 100. As you see that index start to spiral lower, no longer concentrated in those big tech names, but now broadly those tech sectors, you see the ETF spiraling downwards too. Very crucial to keep an eye on the QQQ ETF because this is the vehicle that a lot of people use for exposure to the tech sector when it comes to investing in a broader index. But lastly, if you thought the selling was bad here, let's take it abroad. Let's spin it ahead to Asia, because if you look at the Taiwan stocks index, it's doing really poorly. And of course, 57% of Taiwanese stocks are tech-based. So of course, that global selling pressure is going to be even worse in some of those Asian markets that are heavily exposed to things like the semiconductor index. And I really want to show you this chart right here on GTV Go. You can always access it. Those support lines, those moving averages where you should have seen some resistance, the stocks just dropping straight through them really tells you that this is very aggressive selling pressure. Investors have a lot of conviction in this trade, Emily.
All right, Kriti, thanks so much. Bloomberg's Kriti Gupta there. Meantime, Miami has been getting some new high-profile residents lately, including investor Keith Rabois, a Founders Fund, PayPal co-founder Peter Thiel buying a house there as well. The city's mayor is also working to promote it as the next tech hotspot. While Miami's tech ecosystem isn't as robust as San Francisco's, it still raised almost $1 billion in venture funding last year, according to Crunchbase data. To discuss Miami's emerging tech scene, we're joined now by Shutterstock founder and executive chair John Oringer. In an exclusive interview, he's also the co-founder of Pareto Holdings, a firm focused on helping emerging startups. And John, I know you're focusing in on Miami. Do you think Miami could be the next Silicon Valley? Because there are doubters out there.
I definitely think it has a shot. Look, COVID changed the way we work, where people live, how we operate and start companies. And I'm seeing a lot of people come down here to Miami. We moved down here in the fall of 2020. And there are engineers here. We're starting companies here. And honestly, it feels like New York back in 2003 when I started Shutterstock.
Now, talking about some of the skeptics, the investor Bill Gurley has said it's no surprise that some investors might be leaving Silicon Valley, but that is not what matters. He says to have a vibrant ecosystem, this in a tweet, you need 3 independent public companies north of a $10 billion market cap. They have that in Chewy. Seattle has it. New York has it. LA is close, but that can take a while. He also says there's a massive network effect for a functional executive to be in the Bay Area. You can always take startup risks because there's always another job. If it doesn't work out, moving away has no such insurance. Would you push back on that?
Yes. I started Shutterstock in New York. In 2003, there weren't many. We literally created the tech scene there. It was Shutterstock, it was a few other companies. There weren't that many VCs there yet, and we made it happen. I don't think all the opportunity is just in a well-established city. And yeah, it may take some time, but starting companies takes time. Building something that matters takes time. And it happened in New York. It could happen here in Miami.
So let's talk about Pareto Holdings, which you started to help build out Miami's tech scene. You've made 100 investments so far. You expect to make another 100 by the end of the year. What kind of company, what kind of founders are you looking for?
Yeah, Pareto is a vehicle that makes both investments and incubates new companies. Many of the incubations are based here in Miami, and we're looking for Miami founders to run those companies. We started 2 in the past 3 weeks with Miami founders, funded by us, funded by Pareto, and we're helping mentor these startups, get them going with their first employees. We do their first funding round, and we want to do more. We have the Pareto Fellowship right now at Pareto20.com, which is a fellowship. You can apply as a founder. We have about 300 applicants right now. We're going through all of them. And we're going to continue to fund people here in Miami starting businesses.
Right. So only 3 days left, I believe, until applications closed. What are you looking for? What's a call out to folks who might be thinking about it but need that little nudge?
We're looking for anyone who wants to be an entrepreneur. We have a list of ideas. We have more ideas than we have operators. It takes a unique type of personality to be an operator of a startup business. And we believe that we can, bring our ideas together with other possible founders and create something amazing. And we know it works because it's happening now, and it's exactly what I've done my whole career. I've started several companies before, including Shutterstock. It's a little bit of a numbers game. I hope we have operators that stick with us through multiple startups, and we have had that already, because sometimes it takes a few before you get that hit. And those early pivots are really important when starting something.
Meantime, Miami is hosting a huge Bitcoin event next month. Jack Dorsey, of course, CEO of Square, attending Square, has a huge Bitcoin business. What's the consensus on crypto in the Miami community? Is there a unique take there, if you will?
Yeah, I mean, I think there's a lot of excitement about crypto everywhere right now. The NFT phenomenon has kind of brought a use case, a valid use case to the blockchain. And I think that's important. I think there'll be others. It's the first that's kind of gotten some traction. We always talked about how images and art and provenance could be validated using the blockchain, and it's actually happened, and there's real money behind it. So I think that phenomenon in the past 6 months has really given cryptocurrencies a bit of support. There's a lot of unanswered questions in regards to valuation and how do you what other business cases will be useful, but time will tell.
So let's talk a little bit about that. I mean, how do you, as an investor, separate the currencies, the opportunities, the companies that are building on to this craze from, some that might be, quite frankly, a joke? We just had an investor on earlier who called Doge not just a joke, but a dangerous joke.
Yeah, I like the business applications or the marketplaces for these. Obviously, we've seen marketplaces go public. They have valuations that are substantial, and for now, they may make sense. I think when it comes to NFTs, I've made a couple investments personally in that space. Pareto has looked at a whole bunch as well. I think there will be other use cases coming out. The use cases are what's going to really matter here. There hasn't been a lot of Bitcoin is still hard to use, right? It's hard to buy stuff with it. I think as the use cases start to come out, we need more than just NFTs, and also friction is reduced, and time to validate on the blockchain with some of these alternative coins is reduced. I think we'll see more uptake in the future.
All right, fascinating, and we will see how Miami evolves. John Orger, Shutterstock Executive Chair, co-founder of Pareto Holdings. Thanks so much for stopping by. All right, an update now on that story we brought you at the top of the hour that everyone has been talking about. Colonial Pipeline has initiated the restart of its pipeline operations after that massive hack. In a statement we just got from Colonial Pipeline itself, they're saying following this restart, it'll take several days for the product delivery supply chain to return to normal. Some markets served by Colonial Pipeline may experience or continue to experience intermittent service interruptions during this startup period. Colonial will move as much gasoline, diesel, and jet fuel as is safely possible and will continue to do so until markets return to normal. All right, coming up, U.S. states getting creative in how to get more people vaccinated. A free beer, a $100 savings bond, free subway passes, among many other things. We're going to talk about whether these incentives will actually work in our City Lab conversation next. This is Bloomberg. Well, about 60% of U.S. adults have gotten at least one dose of the COVID vaccine. A new poll by the Kaiser Family Foundation's Vaccine Monitor found only 9% of those who haven't yet been inoculated plan to do so. As a result, cities and states across the country are coming up with incentives to get more shots in arms. New York is offering free transit passes at some stations and tickets to venues like Lincoln Center. Maryland giving its vaccinated state employees $100 each. But some researchers say these incentives could actually backfire. Joining us now to discuss, Bloomberg's Sarah Holder, as part of our City Lab series. How could this backfire, Sarah?
Thanks for having me on. I think some of the potential drawbacks of these kinds of incentive campaigns are that for those already nervous about vaccine side effects or safety, payments could make getting the shot seem more risky, even though it's been proven to be very safe. Like if this is so safe, then why are you paying me to get it? Introducing financial motivations could also erode one of the clearest, most fundamental, community-minded incentives for getting the vaccine, that your personal immunity really benefits the collective good, and replaces it with this more selfish perk. But there still needs to be more research on how these work. In Buffalo, New York, vaccine appointments were slowing down, and this bar said, come in, get vaccinated, get a free beer, get a free drink, and the line was out the door. And so many more people showed up there than they did at other sites. So it kind of remains to be seen how these play out.
Uber and Lyft are offering free rides as well to vaccine sites. What's the history that we have of whether incentives like this will work? I mean, maybe, some people don't want the vaccine. Others might just be procrastinating.
Right. I mean, there's a long history of using economic incentives to encourage behavioral health outcomes. So there is a 2015 trial in which people were trying to test whether paying patients or paying doctors would lead people to lower their cholesterol levels. And they found that only by paying both patients and doctors did cholesterol levels, pretty significantly decrease. HIV prevention and HIV treatment and testing have been incentivized using cash payments and those sorts of financial incentives, and that's had more mixed results. There hasn't been a lot of testing until now in these natural experiments on how cash incentives influence people's desires to get vaccinated. There has been polling around this. So some forthcoming research shared with Bloomberg City Labs showed that there was no significant change in survey respondents' desire to get vaccinated if they did get paid, but if they had to pay a $20 copay, that would deter them. But then other research from UCLA found that a $100 incentive would encourage people to get vaccinated, and especially that was especially true among Democrats. So again, it's a bit of a mixed bag as for now, but I think especially for those people that you're mentioning who maybe are like, I'm young, I'm healthy, I might not need to do this ASAP, I don't want to go out of my way. Having a tangible perk might encourage them to take that extra leap and go for it.
What about for the folks who, aren't getting it for other reasons? And I wonder if in that case there are any incentives or strategies that will work.
Yeah, I mean, I think broadly another strategy that's being deployed by the federal government is really meeting people where they're at. Maybe that's physically, with mobile vaccination sites, going to people's homes if they're homebound, putting locations in hard-hit communities and hard-to-reach communities. It's engaging with trusted messengers in specific communities, and it's really talking to people through these decisions, and maybe that is more effective in some cases than a free beer. But it really depends on who you're talking to.
Yeah. I could see that. Sarah Holder in our City Lab segment. Thanks so much, Sarah. Really interesting nuances there. Thank you. Meantime, Novavax has pushed back its timeline for its COVID shot and doesn't plan to file for authorization in the U.S. and Europe until the later half of this year. Novavax CEO Stan Erck spoke with Bloomberg earlier about the company's decision to delay that start date.
Why is it taking longer than we had hoped to? It's where our starting point was a year ago. We've got all of the manufacturing data to put together into a package that we submit globally to all the global regulatory agencies. And with that, we submit all of the clinical efficacy and safety data. And we have some of the best clinical and safety data that exists. And we've got that put together. We're assembling the manufacturing package. And frankly, a year ago, we had zero manufacturing capacity. We had zero analytical and process development laboratories, and we've built that all in a year on 8 different countries. So that's what's taken us longer, but we're there. We've got, I think, all of the data being assembled now, and so I think we're in good shape.
So Stan,
I think
just to be clear, there is no problem.
Sorry.
There is no problem with the vaccine. This is a manufacturing issue, not a vaccine issue.
No, it's not. No, we've shown consistently we've got a great vaccine, and in fact, we're about to unblind a U.S. trial that has 30,000 people in it in a couple of weeks, and I think that'll just further support the fact that we've got a great vaccine.
How many doses do you anticipate you'll be able to provide in 2022?
We're looking at between ourselves and our partners, we're looking at providing 2 billion doses. And we're moving toward that rate of manufacture right now. Everybody has had some problems here and there with the raw material supply. We're getting through those. I think we had some breakthroughs this week in terms of getting things like filters and bags and that distributed around our sites. And we'll be by the end of this year, we'll be at the rate of maybe 150 million doses a month. And between now and then, we'll build up the capacity to do that.
Stan, one of the big advantages that your vaccine had was that it was more stable at a higher temperature. The mRNA teams have managed to be able to tweak theirs. They're now stable at higher temperatures. Do you think the advantage that you were able to demonstrate earlier on has been eroded by the fact that this is coming a little later than anticipated?
No, well, you have to look at across the board. So what are the factors? What are the characteristics of a vaccine that make it better or worse than some other vaccine? You've got efficacy. We have demonstrated efficacy at least as good as everybody else's. We had 96% efficacy in a large UK trial against the original Wuhan strain. We showed that I think we're the only company that's shown in an efficacy trial that our vaccine works against the variants in the UK and South Africa. So that's great. The second thing you want to look at, well, maybe the first thing you want to look at is a safety profile. We have the best safety profile, the most benign vaccine that exists right now. And then you look at the stability. It's important, and we will be able to. We'll have stability both in storage and in shipping and in the doctor's office at refrigerated temperatures. And so, I think that all of these put together determine how your vaccine stacks up.
Novavax CEO Stan Erck there. All right, coming up, you didn't think we'd forget about it, did you? Yes, of course, the Epic Games high-stake antitrust trial still underway. We're going to bring you this week's action and a look ahead to when CEO Tim Cook will take the stand. This is Bloomberg. The Apple versus Epic antitrust trial is on week 2 of arguments to decide if Apple's App Store is a monopoly. Today, a hint of a potential compromise floated by the judge. Let's bring in Bloomberg's Mark Gurman, who has, of course, been covering the trial from day one. Mark, what's the latest?
The latest is we are in, I have to say, one of the more boring periods of the trial. This is where the economists are going head-to-head to try to make their case. If Apple's profit margins are monopoly-like, what changes or not Apple should have to make to the App Store. One of the more interesting things, Emily, that happened this week was the judge actually floated a compromise for Apple and Epic, actually something that I think we talked about a month ago. I certainly wrote about it on the website. Basically, to take a step back, the reason we're here today is because of V-Bucks. That's in-app currency, virtual dollars that Epic sells through Fortnite. And if you buy something through an app or a game on the App Store, you have to give Apple 30%. Apple or Epic didn't want to do that. What they can do, though, is sell those V-Bucks through their website. The problem is Apple doesn't allow developers to advertise that in their apps. So my idea was, well, Apple could be forced to allow developers to advertise alternative payment methods through a developer's website. And now that's what the judge floated. She asked, would this be a good solution? So perhaps that takes us a little inside her thinking of when she makes a final determination in the coming weeks.
Interesting. We'll have to see how Epic responds to that. We are waiting for Tim Cook to testify. When does that happen, and what do you expect him to say?
I think the earliest that we could see Tim Cook on the stand would be Friday, May 21st, so in about a week and a half from now. And obviously we'll be watching that very closely. He's probably going to come and sit down and talk about the origin of the App Store, Apple's policies, how they work with developers, why they have these policies in place, and really defend the business model that has become one of the top 3 most important assets at his company.
Any sense of how Epic feels about their presentation so far? I mean, it sounds like many don't seem to be convinced.
Yeah, I don't have particular insight into what Epic thinks their performance has been like so far, but I can tell you that speaking to people at Apple, they appear to be extraordinarily confident about their chances. They've often referred to Epic's witnesses as being star witnesses in Apple's favor. They believe the testimony of Tim Sweeney, the CEO of Epic, the testimony of Lori Wright, an Xbox executive from Microsoft, basically did nothing to help Epic and did everything to help Apple. So Apple believes they're on very firm footing here, but the rest of this week and especially next week will basically tell us everything when you see Apple executives, Craig Federighi, head of software, Phil Schiller, head of marketing, and of course Cook, as we discussed, take the stand and give their perspectives. But then of course it all comes down to the judge and her decision.
Right. Absolutely. Okay. I know you're following it every step of the way, and you'll bring us more highlights later in the week. Bloomberg's Mark Gurman, thanks so much. That does it for this edition of Bloomberg Technology. Tomorrow, you're going to want to join us for a conversation with Bumble CEO Whitney Wolfe Herd, fresh off today's results. We'll also be covering Airbnb, Disney, Coinbase, and more. All coming up tomorrow, right here on Bloomberg Tech. I'm Emily Chang. This is Bloomberg.